urgent, on the morning of August 2026, Tata Group's market capitalization plummeted. Within 60 minutes, 63,000 crore rupees vanished. The sell-off hit the group's largest pillars simultaneously, as shares in TCS, Titan, and Tata Motors went into a synchronized dive. This market panic followed the release of a single resignation letter. N. Chandrasekaran, the chairman of the group's holding company, Tata Sons, announced he would step down in February 2027. Investors view the Tata Group as a proxy for the Indian economy. Its operations range from steel production and global software development to everyday staples like tea. When the man overseeing this vast network exits, the market reacts to the potential for a total shift in the country's industrial direction. Chandrasekaran's career began far from these corporate boardrooms. He was born into an agricultural family in rural Tamil Nadu, where his early years were spent working on the family farm. He chose to move away from agriculture to pursue the emerging field of computer programming, eventually earning a master's in computer applications. In 1987, he joined Tata Consultancy Services as an entry-level engineer. He was a fresh recruit in an office full of white cubicles, beginning a tenure at the company that would last 30 years. This ground-floor start gave him a technical perspective on the group's operations. His rise through the ranks was built on managing the practical complexities of large-scale software projects. After becoming CEO of TCS in 2009, Chandrasekaran oversaw rapid expansion. Under his leadership, annual revenue grew from $6 billion to over $17 billion. This growth made TCS India's most valuable company, providing the steady cash flow that sustains the Tata empire. In 2017, Tata Sons faced a leadership crisis. The board ousted Chairman Cyrus Mistry following a public, bitter dispute over the group's performance. The board chose Chandrasekaran to take the role of chairman and stabilize the organization. He was the first professional manager without direct family ties to lead the group. Placing a technocrat at the head of a legacy industrial giant signaled that Tata would prioritize a shift toward high-tech, capital-intensive industries. Chandrasekaran introduced the One Tata strategy, aimed at simplifying the group's complex structure. He then committed to a $120 billion spending plan to modernize their portfolio. He led the acquisition of the loss-making national carrier, Air India, bringing it back after 69 years and initiating a multi-billion-dollar fleet expansion. He also moved the group into semiconductor manufacturing, a high-stakes entry into the global microchip supply chain that required massive upfront investment. Simultaneously, he pushed for an electric vehicle ecosystem, including the construction of battery gigafactories to support Tata Motors' transition away from internal combustion. This pivot was rewarded by the markets. During his tenure, some Tata stocks saw their value increase by over 1,000%. In 2024, the death of former chairman Ratan Tata altered the power dynamics within the group's leadership. Noel Tata took control of the Tata Trusts. These philanthropic organizations own 66% of Tata Sons, giving him ultimate authority over long-term strategy. Ideological differences soon emerged. While Chandrasekaran pursued aggressive expansion, Noel Tata favored capital discipline and a focus on extracting returns from existing projects. The standoff reached a climax in February 2026. At a boardroom meeting, a proposal to extend Chandrasekaran's term failed to achieve unanimous support, leaving his future unresolved for 6 months. Chandrasekaran's decision to step down demonstrates the absolute power the trusts hold over the holding company. Even with record market gains, a chairman cannot remain in place without the total backing of the majority owners. His departure leaves Tata Sons without a clear successor. The group must now find a leader capable of managing the massive technological transition already underway. The consequences of this transition extend to the national level. Prime Minister Narendra Modi's government has relied on Tata Scale to meet several domestic industrial goals. The plan to turn India into a global manufacturing hub depends on the $120 billion investment pipeline Chandrasekaran set in motion, specifically in semiconductors and electronics. If the new leadership pulls back on spending to satisfy the trust's mandate for capital discipline, these national manufacturing timelines could be significantly delayed. Chandrasekaran's journey from a family farm to the head of India's largest conglomerate has ended with a professional vision colliding with dynastic ownership. His exit leaves the group's massive high-tech projects and the national goals tied to them in a state of deep uncertainty.